Oh, Alibaba, you have disappointed me. Day after day. Why am I not surprised that you are down 2% today? You trapped the bulls above 121 and now you are selling off and it's only 9 a.m. Pacific time. Hi, and welcome to Market Conversations. As you know, I am an Alibaba long-term investor, and I know a lot of people are holding this stock as well above 200. And this stock has been just selling off since beginning of this year and went to a high of 245. And we can see even went to a low of 108. This was after the news that Didi came out that they were going to get delisted from the New York Stock Exchange. There was also news from Didi last night, so it could be the reason why Alibaba is selling off right now. So last night, they announced that current and former employees are prohibited from selling company shares indefinitely. Didi extended the prohibition from December 27 without setting a new end date. So there's still a lot of risk with Chinese stocks, even though Didi was not even supposed to be listed, but they did anyway. So we can also see this news here that the short interest has gone up. Alibaba short percent of flow has risen 5.26% since its last report. The company recently reported that it has 48.14 million shares sold short, which is 1.8% of all regular shares that are available for trading. Based on its trading volume, it would take traders 2.1 days to cover their short positions on average. So a lot of people are very bearish. Guys, let's take out the bears. Who's with me? Take a look at these options chain here. The IV has gone down from 100%. This was 2 weeks ago. That was the best time to sell cash secure puts. So we take a look at the January 21. We do have a lot of puts being bought, or it could be sold too. It's really hard to know if you guys are buying or selling. So, but we do have volume coming in for the 110. And even, let's take a look at this. Even the 10 strike price, I mean, these are only going for $2, but that would be insane if Alibaba actually went down that low. So if you guys have a huge position and you're afraid that the stock is going to go down, I would hedge your position and just pick it further out expiration dates. Let's say May. You can buy some of these puts. They are very costly, but what you can do is you can buy a put debit spread. So let's say you think the stock is going to go below 100. You can buy the 100 strike and sell the 95 strike. You're looking at 150 instead of paying $600 or $800. And you'll make a max profit of 350. I know that's not a lot, but if the stock continues to go down, at least you'll have some protection there. And if you haven't got in and you think that the stock is going to go up eventually, you can sell cash secure puts because the premiums are still pretty decent. Even for the 110, you're getting $380. But of course, there's still a lot of risk. This can easily go down to 100. I hope it's not because I'm not properly hedged. I do have some call options that expire in 2023. There are actually 300 calls, which I got when the stock was trading above 200. No one knew, well, I wouldn't say no one, but majority of the people did not expect Alibaba to go below 150. There were people that said 180 was the bottom, 170, 160, 150, 140, 130, 120, and now it's trading around 116. We can see in this daily chart, it's just been trading sideways. So I would highly suggest staying away from buying short-term call options or even short-term puts, because if it trades range-bound, you're going to lose money on those calls and puts short-term. So we're just going to have to see which direction Alibaba goes in the next couple of weeks. But in the meantime, Stay properly hedged. Try not to go crazy with short-term call options or puts. And we just have to stay positive if you guys are long-term Chinese investors and are still holding on to this.